Hi guys, my name is Grant Moreland and I do multiple six figures a year doing what's called tax overage recovery. It has nothing to do with income taxes or the IRS, but what it simply is money left over from a foreclosure sale because of delinquent property taxes. So let me explain. If you owe $10,000 in property taxes and you don't pay it for whatever reason, the county will come in or tax collector's office will come in and they'll place a lien on that property. And if you still don't pay it, they'll put it on a public auction block and they'll sell your property in order to recover those back taxes. Now, once the property is sold and the $10,000 is paid back, anything in addition of that sale, any additional money from the sale is called an overage or surplus funds or excess proceeds. So for example, if you owe $10,000 and the county comes in and sells your home to recover that, and the home sells for $100,000, well, there's a $90,000 difference sitting in the county treasurer's bank account, earning interest. Well, the thing is that money has to be claimed by the prior homeowner to recover it. Well, I know what you're asking is, well, Grant, why doesn't the homeowner just go and file a claim and recover the money? Well, you'd be surprised that for some reason, they don't know about it. How can that be? Let me explain. So you're wondering, why doesn't the former homeowner just go down to the county office and file a claim and get their equity? Because again, this is their equity from their home and recover that money. Well, there's something called the minimum legal obligation of the county. And that minimum legal obligation is to let that homeowner, prior homeowner at this point, know about that money, is to place a tiny little classified ad in a newspaper within the county, which most people don't read, stating that the property was sold and that there may be money left over from the sale. Think about that. To meet their minimum obligation, all they have to do is place a tiny little ad in a newspaper in that county, which most people don't read, in the back of the newspaper, albeit, stating that the property was sold and then there may be money left over. So do you think, from a logical standpoint, do you think that this property owner or former homeowner is going to know that money exists? Of course not. There's a reason why. If they don't file a claim within 1 year, the county gets to keep the money or send it upstate. The state gets to keep it. So think about that. So the way you're going to find out if you're owed this money is if you happen to be reading the Lakeview Journal, which circulation of 5,000 prints in some tiny corner of the county. If you happen to be reading that newspaper and it's just an example, and you see that your property has been sold and you're owed money, then you're aware of it. But the chances of you knowing about that are almost slim to nothing, because most people, number one, don't read newspapers. Number two, even if you did, you're probably not going to read, a smaller publication that has a low circulation rate, just being honest. So they have 1 year to file. If they don't file a claim, then the money gets either sent to the state or the county gets to keep it. So as you can imagine, they're sitting there waiting for hopefully that claim doesn't come in, because if not, we get to keep it. Albeit that whole time, it's also earning interest for them. So think about that. So really, in essence, this is home equity theft, because the county tax collector's office or treasurer is outright trying to keep the equity that the former homeowner built over time by doing very little to nothing to let them know that they're owed this money. So to me, it is a moral obligation, not just a financial one, for our team to go out and help these folks. Now, the Supreme Court ruled in May of 2023, I believe, that the states and counties can no longer just keep the money, because believe it or not, there are several states where they would just outright keep the money. I believe it was in Michigan where a woman owed, I believe it was $500 in property taxes, a small amount, and the home sold for $35,000 or something of that nature. And the county decided that they were just going to outright keep the money. They weren't going to give her a dime. Well, being smart, and her legal right and moral obligation was to fight it. And she did, and she won. It went all the way to the Supreme Court, and there was a ruling stating that the counties can no longer just outright keep it, because some counties were just keeping the money straight out. Now, I invite you to visit a website called the Pacific Law Group. I'm not affiliated with them. I'm not a lawyer, just to let you know. And I believe the web address is homeequitytheft.org. I invite you to look at it and see some of the states that have outright been keeping this money, because they do not have a legal right to keep this money. It's your equity. They do have a legal right to recover the back taxes, of course, because that was money owed to them. They have a right to do that. But anything in addition, they do not have a right to keep that money. That must go back to the former homeowner. And that's why they designed the laws to be a little sneaky, to say, hey, post an ad somewhere in a little newspaper and hopefully they won't read it, and then we get to keep the money. Or post a note on their door and we know they're not even living there anymore. They don't put any effort to reach out to these folks. And that's what our company does, is we have a team and we reach out to these folks, and we do massive audits, not only county databases, which is public information, but we also look at auction data, and then we reach out to these folks and let them know, how much money is owed to them and what their options are to recover it. And that's what we do. We've been doing that for about 7 years now. So a lot of people are going to ask me, what is the scope of work involved in order to do this? And there's really 4 simple steps. The first step is going to be to locate the funds. That's the very first step. And that's the overage or excess proceeds or surplus funds, whatever you want to call it. Those are sitting at the county's website, or you could get that information through auction sites. So those are the 2 locations you can find the funds: through the county's website, their database online, which they post sometimes, or you can audit an auction site, and we show you how to do that in order to find the overage. So it's really simple. Locating the money is very simple. That's not difficult at all. Second is locating the owner. Now that can be a little tricky if you don't have the right tools and software in place called skip tracing. And we use IDI Data, which is a very good skip tracing company. So we don't have any issues locating people. Third is getting them to work with you, because once you find the owner of that money, you have to get them to agree to work with you so you can recover the funds, right? So you'll get agreements between you and your client. And then once you get those agreements back, you will submit a claim to the county or whatever fiduciary is holding the funds. Okay. Now, this could be also done with mortgages. There's something called mortgage overages as well. The same process, it's just the money sits in a different place and the documents are different. So rather than filing a claim with the county to recover the funds, you'll be petitioning the court in order to recover the funds, and you need an attorney in order to do that. So that's really the 4 main steps: is you're going to locate the money, you're going to locate the owner of that money, and then you're going to get an agreement between you and your client, or your company and your client, and then you're going to submit a claim on their behalf, and you earn a percentage of what you recover. So average fee, depending on the dollar amount, would range anywhere from 10 to 40% depending on the dollar amount. So usually the larger the dollar amount, the lower the fee. I know a lot of people want to charge outrageous fees, in which you can, but some states do have limits in the amount that you can charge. So if you have a claim that's, worth $200,000, which, by the way, $200,000 on a coastal state is not uncommon, like Florida, California, any kind of coastal state, a $200,000 overage is not uncommon. You will see that. And you charge 10%, that's $20,000 fee, right? So I don't know of a lot of opportunities out there other than maybe being an attorney where you can earn such a substantial fee and be able to do this with a laptop and a phone, because that's really all you need. Now, I'm not going to sit here and tell you that it's easy and that you're just going to make a few phone calls and, people are going to be knocking on your door to work with you. It does take work. It does take practice. But once you get the system and process down, it's a rinse and repeat cycle. And from there, you'll start seeing consistency, and that's when the money really adds up. So just in real simple terms, how this works: you lost your home due to delinquent property taxes or delinquent mortgage, because this does work with mortgages. There's money left over from the sale, because once the property is sold, they want to recover the debt, whether that debt is the delinquent taxes or the mortgage. That money is going to sit somewhere. It's either going to sit with an attorney if it's a mortgage, or it's going to sit with the county in a trust account with tax collectors. So those are the 2 places this money is going to sit. But you have to file a claim in order to recover it. You have to submit certain documents with specific language in order for that money to be released to you. Now, the county is hoping that you don't know about it. As we discussed earlier, they're really sneaky in how they do that by just meeting their minimum legal obligation of posting a little tiny newspaper ad somewhere. So you think about it, many, many, many people don't know about this. And it's pretty shocking that a lot of people, it was actually kind of hard to believe, because when I first discovered this, I was in the downtown San Diego library, and a YouTube ad came on by a gentleman by the name of Bob Diamond, who was an attorney, and he started discussing about this and how this worked. I didn't really believe it at first, but as I dug in a little further and did my due diligence, I found out what he was saying was correct, that this money is sitting with the counties and of course with attorneys as well if it's a mortgage, and these prior homeowners have not recovered it, and it's a substantial amount of money. I would give you a little tip just for your own known. Go to depending on the state you're in, just type in tax sale and then type in surplus funds and then the state you're in and then the county in which you live. Type that up and you'll probably be able to see some of this money sitting on the website. So just type in tax sale, surplus funds, and then, it'd be like, California, Fresno County, right? You could use that one. You can go to tax sale or excess proceeds, tax auction, Fresno County, California. And then you could type in the year too, if you want a current list like 2024, 2025, and you can pull it up there. So that way you can see for your own eyes, your own eyeballs, that this money is real and it's sitting there. Because a lot of people, they have a hard time believing it, and rightfully so, because there's a lot of scammers out there and things like that. So another thing about this opportunity I want to go over is sustainability. Whenever you're looking at any kind of business venture, you need to look at sustainability in the long term. No business is going to last forever. So don't ever think that. Every business, even Amazon, at some point is going to be out of business. There'll be something else. Maybe we won't buy products anymore. Maybe everything will be, I don't know, digitally implanted in our brain somehow. I don't know, but no business lasts forever. But this business, tax overage recovery, is sustainable, and for several reasons. Number one, this opportunity or this business model is built into the law, specifically foreclosure laws, okay? So whenever something is built into the law, it's usually going to be there for a long time. Rarely, you do hear new laws being created, but rarely do you hear old laws being rescinded or changed. So this is built into foreclosure law. That's number one. Number two, there will always be property taxes. There will always be property taxes, because property taxes pay for the fire department, they pay for the library, they pay for police services, they pay for roads. They need that revenue stream. The county needs property taxes because that pays for the operations of that city and that county, right? There will always be property taxes. And number three, there will always be homes and people. Hopefully, if we don't destroy ourselves, pray not, pray God we don't. There will always be homes and people. As long as these three elements exist, this business is good for the long term. Now, I'm not going to sit here and tell you that it's an easy business. It takes work and it takes building the right system and processes in place, but it's very lucrative and it's a very noble opportunity as well, because you're doing the right thing by helping these folks out. So again, sustainability, this is built into foreclosure laws. So for long-term sustainability, if that's the right word, it'll be there. There will always be property taxes, and there will always be homes and people. In addition to, if you want to add even another, there will always be mortgages. The good old mortgage, I think mortgages now are what, 7%? A lot of people are falling behind on their mortgages right now. You're probably going to see an increase in mortgage delinquencies in the near future, especially with the way economic things are going right now with inflation. You have tariffs now. You have a global economic instability because of wars and other things like that. So chances are you're not going to see prices go down, but chances are you're going to see prices go up. Okay, so those are really the four main elements of why this opportunity is sustainable in the long run. And that's something you need to seriously consider whenever you're going to invest any time or money into any business venture. Is the business model, is it sustainable for how long? This isn't an algorithm or a trend. We're not selling hoodies or cat videos. This is a real business model that's built into the legal system. Now, just disclosure, I'm not a lawyer, so I'm not going to give you any legal advice, but this is built into the legal system. Now, most of this stuff you can learn as far as statutes and process and legal requirements, you can learn through the state statutes governing tax foreclosures, okay? And I give you all of that, everything you need within the training that I provide you, the private training. You get all the online resources you need. You get the templates for contacting the claimant, marketing templates, the email templates, the specific contracts that you need. You get everything you need to really get up and running. And it took me 7 years to figure this all out and to actually be able to teach it and share it with you. So it wasn't something I discovered, a year ago or a couple weeks ago, a couple months ago. This is 7 years of work I put into this for you guys. Now, if I hope you found this interesting and you want to learn more about it, just click on the link below. And we have Facebook group, we have the YouTube channel, and also our private training you can check out. Thank you for your time.